You know how to design stunning spaces and turn vision into structure, but what about the structure of your own business? In this episode and in this series that we're kicking off today, we're going to talk specifically to different industries. And today we're talking to architects and architecture firm owners. From billing models to project delays, running an architecture firm comes with unique financial challenges. We're here to help you manage the back end of the business so you can focus on creative work. We're going to dig into business structures, how to handle the lumpy revenue from long projects, expense categories that matter at tax time, cash flow issues, and tips to just smooth out billing and stop undercharging. If you've ever wondered whether your firm is actually making money or simply staying busy, this one's for you. Welcome to the Unfiltered Profit. I am Caitlynn here with Seanna today, and we're really excited to kick off this series, and we're really excited to start with architecture firms. I'd say it's kind of been Seanna's bread and butter for the last many years, and so I'm really excited to kind of let her lead this. I'll pipe in with some tax stuff, but welcome.
Yes, welcome to this episode. I'm so excited to dive in. As a little bit of background, this was mentioned in our introduction episode, but if you haven't listened to that, that's okay. So my background, my dad is a civil engineer, and I grew up working in the family civil engineering practice. And that really shaped my mind about engineering and architecture firms. And a lot of times in the industry, you see those go together, engineering and architecture, A&E firms, or you see the industry, architecture, engineering, and construction, AEC, combined together. And I do think a lot of the issues from an accounting standpoint go hand in hand across those types of firm models. And so I've spent the past several years doing some consulting for one of the software platforms, Monograph, that does a kind of like practice management software for architecture firms. And it's just been fun to be part of that and work with our architecture clients. So I'm excited to kind of share a little bit more of all that I have learned and seen over many, many years of working with these types of firms. First thing I want to say is that architecture firms have nuances compared to like a CPA firm or a marketing firm or anything that's like a professional service firm. But there are also a lot of similarities. So if you listen to any of our future episodes where we're talking about other types of professional service firms, you might say, oh, well, that's similar to what you mentioned here. Yes, like there are similarities. There are also some very unique situations with being somewhat tied to construction schedules and everything that are unique to architecture and engineering firms. But one of the things that a majority of architecture firms are solo practitioners. They have a little bit more difficulty scaling. I've seen some stats out there about how many solo practitioners there are, and there are a ton. It doesn't mean that it's impossible to scale an architecture firm by any means. Most of them are solo practitioners, and they work with contractors or some sub-consultants.
So kind of like we would see a CPA start their own firm, but with CPAs, what we tend to do to scale, as you and I have done, is partner. So is that similar for an architecture? Maybe that's why they see some resistance, is like, who am I going to partner with?
Yeah, I do think that it takes a certain partnership structure for them to get to that point. I mean, we've seen it for ourselves, and it's not that you can't scale on your own as a business owner, but it is also nice to have another credentialed person by your side. So I'd be interested to see the stats of, how many people scale without having more credentialed individuals on staff, because then you can't, for us even, like you can't step out of a reviewer role when you need that CPA signature. As an architecture, like you're the ones finally like signing off. You can't step out of the client work to focus on scaling unless you start to share that workload across licensed individuals.
Which makes sense. So yeah, let's dig in, I suppose, for lack of better terms. So when you're an architecture firm, let's kind of talk a little about the bookkeeping, accounting side of it. You mentioned you work with Monograph and have consulted with them. I know when we see clients coming in now that I've partnered with you, I see Monograph mentioned quite a bit as like a preferred software for these folks. So let's talk about that, how it integrates, kind of just like the ups and downs of accounting for an architecture firm.
Yeah. I want to preface this. I have done consulting with Monograph. I don't think that the primary solution. I've actually talked to some smaller firms that they're like, okay, I'm thinking about using Monograph. And I'm like, Let's talk about what your processes are that you have in place already and decide if adding in a software right now is really the solution. And that's across the board. That's not just practice management. That's like a good conversation to have at any point. Are we trying to make a software become our lack of, like, be the silver bullet for our lack of processes?
Right.
That's never going to be the solution. Then you're just spending more money for still not having things under control. I always feel that first clients need to do a good job of project tracking and understanding where their profitability is for projects that they are putting out into the world. And that is the number one thing that I see. They're like, well, I'm going to use Monograph for that. And it's like, hey, that's not the first solution where we start managing things. Like, let's take it all the way back to your proposal process. What does that look like? Are you estimating your team's hours? Even if you're pulling together a contract for a project and you're going to be doing progress billing based on percentage of completion, to get those values, you had to do some sort of estimate of your team's time and build in some sort of profit margin, or you've got hourly rates for your team and you have some sort of labor multiplier on there that you're using to build out that contract value. That's great. You've built a flat rate contract. Now, on the backside of it, is your team tracking time to that contract to know if your estimate of their time was good or not? Are you submitting change orders if the client comes back and they push beyond like X number of revisions? And all of these things, like as I say them, it's like these apply to us too. We do flat rate billing, all of these things. And like, we might not have like change orders and stuff, but it's the same sort of thing of having additional requests that come in out of scope work. And so even if you don't want to do hourly billing for a client as an architect, you still need to be tracking in some way, shape, or form your team's time, your time, and making sure that it is within the scope of what you priced. So start there. That can be on an Excel sheet. That can be in QuickBooks. That doesn't need to be an additional software subscription that you're layering in, because Monograph and like other ones, there's BQE, like they are very robust systems and there's a whole lot more to them rather than just looking at profit margins on projects. Start simple, make sure you're getting good data from that. And then we can layer in capacity planning and all the other bells and whistles that come with a software such as Monograph.
I really like that. So you and I have had the discussion, I think every CPA and probably professional services, so like an architecture firm, like flat fee versus hourly versus like value billing, I suppose is what you and I would call what we do. How does that play out for an architecture firm? Like if they're sitting there either just starting their business or maybe trying to rethink their business, how would you guide them on deciding just how to bring in the revenue?
Yeah, I love that question. I think the first place that I would start is just understanding where they stand today. And that would be looking at how they're building out those contracts and like what their current pricing looks like. What is their labor multiplier? What are they charging themselves out at? What are they charging their team members out at when they build out those contracts? I think every business would like to push towards some version of value pricing where your expertise in your industry gets that additional value tied to it. However, sometimes that's hard, right? Because our clients are going around and they're pricing the market and like they might think you're the best architect, but they're also not willing to pay another $5,000 or $10,000 for that. So it gets a little messy when you're like, okay, this is like what it would cost and I'd have a good profit margin, but I probably could add X amount more, but you also don't want to lose that project over that.
Right.
And I mean, that's the same for us as CPAs. I would encourage them to lean into that a little bit where they feel like they could. Honestly, there's lower hanging fruit than adding in any sort of value pricing. I see clients, and this is in construction and this is in architecture, see clients that are dealing with some sort of a sub consultant, or they are buying materials in the construction world. And so they're having to handle talking to that vendor, dealing with that vendor's billing, dealing with their schedule, all these sorts of communications that go into managing a sub. And then they don't charge any markup on that. And so it's like they're almost not considering their time and the pain in the butt that comes with the cash flow and everything else for the sub consultants. So that's one of those places where it's like, if I wanted to really evaluate and just like give you one simple trick, it's
Mhm.
like add some sort of markup on there for the time that it's taking to deal with that sub. And I think a lot of people are just pushing them through at flat rate.
Mhm.
Um, so that's another just simple, easy trick. Like look at your pricing, what you're charging out for your people, for yourself, and then also look at what you're charging for sub consultants. Make sure that you've got some sort of time built in for handling those vendors.
I like that because, I mean, otherwise, yeah, it's just a straight reimbursement, and then you haven't taken into account any of it. So, okay, we've got architects who maybe didn't study a whole lot of business. What is a labor multiplier so that they can understand, like, one, if they've been doing it, and two, if they haven't even started yet, what it needs to look like?
Yeah. So labor multiplier, let's say that you're paying your team member $50 an hour just to try to make the math simple. There is cost associated with managing that employee. So first of all, we need to just even get a good hourly rate on them.
Mhm.
Uh, we have taxes we pay as an employer. You maybe have a 401k. Like there's just different things that are associated with having them, which we refer to those items as burden. So we've got taxes, we've got their computer, their equipment, their 401k, all their benefits, health insurance, all of that kind of falls into that labor burden, which makes up the total cost of the employee. I'm just going to say, like, it's a $50 an hour employee, $15 of burden. That's very high.
But we'll
That's
go with
not
it.
good math, but we're just going to make it simple from that standpoint. Then we have to look at, okay, this is a $65 an hour cost of an employee. What do I charge them out at? And then those numbers are astronomical, from this example. But let's say we're pushing for a 3-time multiplier. I think, across the industry, that's a pretty good place to start, a three-time multiplier. So if their total cost is $65, we're multiplying that by 3. We need to be charging them out at $195 an hour
Mhm.
in order to make a good profit on them.
Which is, I mean, saying something. And honestly, if you've been in professional services, working at CPA firms, like I remember my billable hour to a client was definitely much more than I was being paid. So if that's how you kind of have seen it, if you've worked in an architecture firm and ever seen your billing that your firm had put together, that's probably what you were seeing. And then the beautiful part is, right, so you've 3x'd it. Now you have room to discount it, because I know that's what the firms always did with my work, is it got brought back down to a place that you could. If they do cost you 65 and you bill out 3x, you still have some wiggle room for
But the
discount.
thing I do love, and that is hard, and I say love sarcastically, because as you scale and you get employees into any sort of role where they start to see your financials, see your billing within the company, I know there's that employee pushback of like, I only get paid $50 an hour, and yet they're charging me out at $200 an hour. Like these
Mhm.
people are just rolling in the dough. They bathe in dollars kind of thing. We're speaking to business owners in this episode. So I know you're sitting back laughing and rolling your eyes because you're like, yeah, but there's all this cost that comes with running a company, all this overhead that is not tied just to an employee. It's
Right.
all the things, insurance and everything that goes into it. And you're not bathing in dollars just because you charge them out at that rate. That rate is covering the fact that, guess what? 100% of their hours are not billable, or additional hours get spent on projects that we didn't intend for them to be spent on, all sorts of things. And so we have to have a good multiplier just to make sure the company has profit when we get to that bottom line.
Without a doubt, because and taxes, right? We have to pay for taxes, and so that can be an area that you can optimize as an architect firm owner. And like we said, a professional services. So we go back into those like LLC versus S corps, just like with CPA firms, real estate agents, like your state might mandate what you're allowed to do and what you're allowed to form. So that's a good time to talk to a lawyer or a CPA on like, hey, what kind of entity can I be?
Yeah.
I will say we are recording this after the new tax law got passed. The OB3 is what I will be referring to it as. And that has actually made a lot of tax pros pause and think like, hey, does a C Corp now make more sense? So this is now an actual discussion area. It is not one that I would just like thumbs up, let's LLC into an S Corp as soon as possible. A C Corp is now becoming something that you might want to consider, especially if you're growing and you're going to have what we call nexus or presence in other states, because maybe you're doing some projects in the state that you live in, but you actually take on a few in your neighboring state. you've got some complexity going on. So thinking through all of that, adding that into the cost piece of this, budgeting to go talk to a professional before you get too far is a
Because
really
you're
good
also
thing.
stuck with that corp decision for 5 years. So if you elect the S corp and then we're like, "Oh, I didn't even know a C might be a good option." Sorry, you're stuck 5 years.
Yeah, and the cost to swap from one to another could be expensive. So if you go into a C and decide like, oh, maybe I wanted to be an S, you actually are going to have some taxes to pay because you hadn't paid taxes on everything. It's a whole thing and a whole huge project. So you're much better off just starting how you want to end and making sure that you have those discussions up front. And the nice part is because you're seen as a professional services, you don't have to find like an architect specific. You do want someone who understands the business, understands what you're doing, but they'll be able to see the bigger picture. So what are some like red flags and then also some good habits that we would want these architect firm owners to have?
I don't like red flags. I think I will say, what are some issues that I see on a regular basis with architecture firms? So the first one I'm going to hit on, I've kind of been like laying into this a little bit, is like, it's not enough to just price a project, do the work, and then hope there's the profitability at the end of it that you were hoping for. You have to manage the project. You have to manage your team, your sub consultants. You have to make sure that the pricing that you originally scoped out is what is being billed to you. If it's a sub consultant, the hours you've planned out, your team's not going way over it. Because if that's happening within your team, you've got a couple of things you need to look at. Is this a team efficiency and training problem and they don't understand what they're supposed to be doing? Or do you have a pricing problem and you just think it takes way less hours than it does? So you've got to really continue to dissect your projects, do a kind of like after action analysis on a project and be like, okay, what was our actual profit margin? Was that what I planned? All those sorts of things. Do I need to have better boundaries with clients? I need to threaten additional billings. Like, what does that look like? It's kind of the thing, like you don't get to abdicate your role as a business owner by hiring professionals. You don't get to abdicate project management while you do the work. Like you have to step back into that role and look at it, because otherwise you end up in this place where I see very often with firm owners is they just have cash flow problems. Why are they having cash flow problems? Well, essentially they've got too much team for the revenue that they're bringing in. And it's not an issue with winning projects. It's an issue with getting projects out on time, billing on time. It's all a time issue. They'll be like, I'm too busy to go through and do all the progress billing. Well, then I guess you're too busy to not go bankrupt, because cash is what makes you bankrupt. Like it's the inability to pay things that cause your business to fail. It's not the inability to bring in revenue, even though they do go hand in hand. You can bring in a ton of revenue and be cash poor, and sorry, your business can't operate anymore. So you have to care about the cash piece of it. And just too often I see people with too heavy of an employee load for what they're billing out. And sometimes that is an industry lag with like what's going on with the construction of projects. And we need to have ability to have lines of credit for bad times and then pull from it and pay it back. There are tons of different techniques and we could go on and on about that. But I think the biggest thing I would want to say is like, you have got to continue to manage the projects and your team. Be willing to make tough decisions if you feel like your team is just not efficient.
It's those pieces. And I think the big pieces for any professional service, probably any service based maybe, is that like just because we did the job, so we were able to do the architecture piece of it, doesn't equate to being a firm owner. Like there is a whole learning curve there, and you need education around that, and you have to take the time to invest in like, how do I run this firm well, and who do I seek out for that help? Make those decisions, because you could be the best architect there ever was, but if you can't manage the cash flow, if you're relying completely on loans that are high interest, like you're not going to last, and you would have been better off staying an employee. So if you want that dream of firm ownership, I think getting some good help in your corner on the bookkeeping accounting side is a place to start.
Yeah, definitely. I think, is it EOS or what book? No, what book is it?
The traction that you and I talk about a lot. No, that would be EOS.
No, it's, man, it's going to bother me. But there's a book where he talks about you have to step out of the technician role and be a business owner. Man, it's going to bother me because it's like right on the tip of my tongue.
When we remember, we'll drop it in the show notes so that you guys can look up the book.
Yeah, but it's like for me as a CPA to think that like, oh, I could just go do this business thing, but not try to invest in understanding how to run the business well. I know people out there hate this, and we've talked about this in the scale versus not scale episode, but it's like, yeah, you have just created a job for yourself as the technician, which is fine.
Yeah.
Unless you're trying to scale and run it as a business. You can't have team and then stay in 100% client work mode yourself, because there are things in your business that need to be evaluated, need to be improved, team needs to be managed. So if you're working on clients 100% of the time, let's talk about your cash flow, 'cause it's probably not great. Let's talk about your pricing. There's probably room for improvement. There's probably a lot of things you're dropping the ball on if you're serving clients 100% of the time.
Because there's no other way, right? Because 60, 80-hour weeks would become the norm. And if you can't manage that team, and you can't, and we've said this so many times, you can't hire all of that out. You can't hire the person to come in and manage your team if you haven't taught them how you want them to manage their team. And that's a pretty hefty cost too.
We don't abdicate the role of business owner. We have to own that if we want to own the business.
And it's self-discovery. You are perfectly fine staying as the technician who owns their job, and that is all you want to do. Perfectly fine. Find a great bookkeeper to help you with invoicing and call it a day. Like, that is great. But that firm ownership, it just looks different, and it has to look different to get to the point where you're not overworked and underpaid.
Yes, absolutely. But let's talk about a couple of KPIs, key performance indicators that are good for architecture firms to just keep in mind. So first, and this is the same KPI across all businesses, let's talk about your net profit margin and what that looks like compared to the industry.
Yeah.
Because again, we have to look industry specific when it comes to these things. You can't compare yourself to others because different industries just have different metrics. Like, let's be honest, because they can charge different prices.
What we use is we use IBIS reports, and they study all of I think they use the tax code. So those NAICS codes that we put on the tax forms, that as a tax preparer, I'm like, I don't know, pick one. It actually does matter. And it helps things like IBIS World figure out what your industry is doing. So for an architecture firm, they are saying that the average profit margin is 16.3%. The average wages are $88,000. So we're talking about a high labor cost, but I'd say a 16.3% margin is super healthy for a service-based business.
Yeah, I think that is healthy. And I like specifically for professional service firms, a lot of businesses, honestly, to look at net profit margin versus gross margin. So just again, if you're not in with the accounting lingo, let's talk about what those both are. So net profit margin is your revenue minus all expenses in the company. And that is your net income. And then we take net income, we divide that by revenue, and that gives us the margin. So how much of every dollar that you bring in from a sales standpoint results in profit at the end of the day. We can also look at gross margin for companies, which is revenue minus their cost of goods sold. If someone has really good accounting tracking, gross margin matters.
Yes.
But when we're in these smaller firms, we know that it's generally not tracked the same. So if you're kind of comparing to industry metrics, you don't know what people have had in their cost of goods sold versus down in their other business expenses. And so I say this because I know we work with business owners that are part of industry groups. And so they have these conversations, whether with their peers in the industry or they get these metrics presented to them. I prefer to look at the net profit margin for a company, just because you don't have to worry about all the where people categorize the other junk, essentially.
Right. If I was categorizing it not as the person who usually works, but labor specific to the projects you're working, is what I would put in cost of goods or services sold. So that we could get that direct correlation. I think another important one is, like we said, wages would be the piece, higher piece of it, but we're talking 33.9% of your revenue is likely going to wages. If you're looking at a 50% number, we've got a problem. We need to talk. And this is why those industries can help, because we can kind of dial in on where might you be off from your peers and what can you adjust so that you get better in line. Because if now you're at 50%, well, that kind of ate up that 16.3% margin, because you still have marketing, you still have utilities, you still have probably rent if you're not working from home. So there's all of these other things that you could easily see that profit disappear on you.
Yes, and that's actually the quickest way I know whether someone has a good multiplier when they're building out their hourly cost is I just pull that percentage of wages, and I like to use the 33% as a benchmark, and then that kind of like falls in line with that 3-time multiplier. We can have the engineers, if they were listening to this, would start to pick that apart and tell me what numbers I forgot as part of that. But in general, I like to see that sitting around that 33% to feel like things are healthy. And if they start to creep up, then it's like, okay, we've got either a billing problem or an efficiency problem. Which one is it? We've got to dive in now before you creep up to 50% or more and you're eating lines of credit and all sorts of other things.
And that's huge. I love the numbers, right? We love the numbers. So when you dig into this, like it is actually more common for architecture firms to have debt against their net worth and that their days receivable, this like stopped my heart. I hadn't looked at this number before. 61.2 days. That's a long time to like have money sitting out there owed to you that you haven't collected. So when we talk about this number, it's how many days does it take from like I billed them to they paid me? And the average is 61.
And let's talk about the things that are happening in those 61 days. Your vendors want to be paid faster. The sub-consultants are coming to you and they don't want to wait for you to receive payment from client. They want to be paid now. So you're having to field those conversations, and your team wants to be paid. They're not going to wait for that client payment to come in. So then you've got to have excess cash to cover that period. But what I would say is let's dig into why it's taking 61 days for clients to pay. Some of them you're going to have stipulations in contracts if they're bigger vendors and they're like, sorry, we just pay on 45 days and you've got to accept that. Okay, well, if they pay on time, then we'll figure out how to have 15 more days of cash flow from a monthly standpoint and we roll with it, right? Or maybe you have some capacity that you fill in a few other clients that do pay faster. But if it really is taking 60 days, why? And what does that look like? And why are we accepting that? Do you have some slow processes? Do you require a paper check to be sent to you? Can they not pay from their invoice and go ahead and submit an ACH? Like any of those friction points result in delays in being paid. And so we can put some simple measures in place to speed that up. But otherwise, we've got to look at maybe you don't have the right mix of clients if that's what your average is truly sitting at.
Yeah. A lot to look at. And there's so many numbers. And I think that, like I said, you don't have to have a specific tax and accounting person, but I think having someone with that knowledge can be so helpful from a consulting startup or just an ongoing piece. And so we hope that these numbers and this information today has helped you. We would love to continue this discussion. If you see the show notes, we'll have all sorts of information on how you can reach out to us. If you want to talk to Seanna, she can take a discovery call and it would be great to see if we can help you in your business. Definitely get below those 61 days because I know that credit card's on 30. So you want to make sure that those bills are getting paid and you're not paying interest that's unnecessary. So thank you for joining us today. We hope you found this valuable. Like I said, this is kind of the start of a series. So come back to see what other industries and businesses we'll be talking about.